Let's talk about margin of safety and operating leverage. We already know what the margin of safety is and how to calculate it. We got it right here. So we're going to just copy this and we're bringing it in here. There we go. So we already know what the margin of safety is. Okay. Now, in order to calculate the margin of safety, we need the break even in sales. Here we go. They produce a single product and the projected income statement is here. So we already know that their sales are 50,000. But what we need to know is we need to know the break even in sales dollars, right? So, well, we could do the break even in units also, but we don't have units. So break even in sales dollars. Copy this because we know that we've got this. So we need that break even in sales dollars. So what are we going to do? We're going to take the total fixed costs, which is $1,833,300. We're going to divide it by the contribution margin ratio. Remember what that is. It's going to be the contribution margin divided by sales. So I'm going to take the contribution margin, 2,610,000, divided by sales, 4,500,000. That's 58%. So now I can calculate break-even sales revenue. This is break-even sales revenue. Okay, so now I can calculate, of course, the margin of safety. My budgeted sales are 4,500,000. And I have to subtract my break-even sales. Once I have that, I'm going to have the margin of safety. This is the margin of safety. There we go. I'm just going to put dollars here. Now let's just remind ourselves what that means. We're going to go back to our right here. This is where our sales are up here. This is where our sales and break even is down here. And that difference here, that is equal to $1,339,137.93. We could round that, right? So that's our margin of safety in sales dollars. Now it says compute the degree of operating leverage. So remember, the margin of safety, I said, is a measure of risk. It tells us how likely we are to fall into a loss position. We're fairly safe here. The margin of safety is very healthy. How else can we determine how risky the business is? We can use the degree of operating leverage. How do we calculate this? This is equal to the total contribution margin in dollars. So this is the total contribution margin in dollars, right? And we divide this by the total operating income. Okay. So there we go. Total contribution margin in dollars divided by the total operating income in dollars. And this is for the existing sales. I'm going to put down for existing sales. Okay. We've got contribution margin in dollars, 2,610,000. Total operating income right here, 776,700. We're going to divide these two. And it is equal to 3.36. Now, sometimes people change this into a dollar value, then they try to change it into a percentage. No, this is just a number, 3.36. That's what it is. So now, compute the new operating income if the sales were 20% higher than expected. So this is how we use this. We do the percentage change in operating income. This is equal to, in this case, 20% higher, so it's positive, and I'm going to multiply it by my degree of operating leverage. So I'm just going to center all of these so that they look a little bit more sensible. What does that equal? Okay, what does that equal? Wait, I'm going to center it. There we go. So we're going to take the 20%, we're going to multiply it by the degree of operating leverage, That is equal to 0.67207. This is actually a percentage. So if sales revenue changes by 20%, then the operating income will change by 67%. So now I'm going to say new operating income. What is it equal to? It's equal to the operating income to begin with plus the percentage change multiplied by the operating income again. That's what it is equal to. So we're going to take the operating income. We know what the operating income is, 776,700. We're going to add in what? The percentage that we've got right here. And we're going to multiply that by the operating income, which we already have over here. Just going to center all these things. Okay, so the new operating income is equal to the old operating income plus the old operating income multiplied by the percentage change that we just calculated. So what is the new operating income going to equal? We can just do this calculation. This plus this multiplied by that. The new operating income is going to be 1,297,700. And I'm just going to put this in dollars. That's what it's going to be. So let's just step back for a second. What does the degree of operating leverage tell us? It tells us how much a percentage change in sales revenue is going to change the operating income. That's what it's telling us. And if the number is high, very, very high, so if this number right here, the degree of operating leverage is high, it means a small change in sales revenue is going to make a big change in operating income. A small decrease is also going to make a huge change in operating income. And they didn't ask us this in the question, but we're going to do this anyway. We're going to do a what if. So what if sales revenue decreased by 10%? What would happen? Well, we're going to do the same thing we did before. First, we're going to use this formula, the percentage change in operating income. So we're going to do that formula first. Percentage change in operating income. But now what's going to happen is we have a negative 10% change. Don't forget, I'm going to multiply this by the degree of operating leverage, and that's going to get me my answer right here. I'm going to center all these. Okay, so negative 10% multiplied by the degree of operating leverage, and I'm going to change this into a percentage. If there's a 10% decrease in sales revenue, there's going to be a 34% decrease in the operating income. Now, calculate the new operating income. Remember, it's the old operating income. Old operating income plus the percentage change, which is a negative number, multiplied by the old operating income. I'm going to move this over so we can see it clearly. And I'm going to center all of these. Okay, so let's look at it. This, and remember, I'm going to add it to the percentage multiplied by the operating income. That's a negative percentage. So we should get a lower number now, $515,700. Okay, because we've had a 10% decrease. So the degree of operating leverage is a powerful tool because it can explain to us what will happen to the operating income with only a small change in the sales revenue. Again, the higher this number is, the more volatile the change is going to be. So we have to keep that in mind. You will be tested on this, so it's really important that you understand how to calculate this. And I hope you had an opportunity to watch the lecture videos before you came here, because it's a lot better if you've watched the lecture videos. If you haven't watched the lecture videos, now's the time to go and watch the lecture videos, because they're going to make this, what I did is going to make a lot more sense when you've watched those lecture videos.